Hey everyone, earnings season keeps rolling on, and it's one of my favorite times of the year because we really get to see how companies are doing. And it's my favorite way to evaluate a business and determine whether it's investable or not. I like to look at the fundamental performance, look at sales, profits, cash flow, and decide if I want to invest in the company. All right, so the latest one and the one I'm going to be doing the video on today is UPS, United Parcel Service, reported fiscal year 2023 first quarter earnings results, and investors were disappointed. The stock was down roughly 10% after this announcement of earnings. So I'm going to look at the earnings report and see if that price decrease was justified. I'm also going to look at the earnings report to consider if UPS dividend is at risk or if there was anything in the quarter that put UPS's dividend at risk. Of course, the stock price decrease has UPS now offering investors a dividend yield of 3.5%. So, understandably, UPS is attracting some dividend stock investors looking at this dividend yield and saying, that looks pretty good. I like a 3.5% dividend yield. Thank you very much. So, I'm going to look at this earnings result. Let's see if there's any risk to the dividend and whether the price decrease near double digits was justified. So overall revenue fell to 22.9 billion compared to 24.4 billion in the same quarter last year, and earnings per share fell to $2.19 compared to $3.05 compared to the same quarter. Now, some decrease was understandable. Remember, UPS benefits when consumers shop online because there is more demand for shipping and logistics where UPS thrives. So when we were spending more time at home, shopping more online, that was great news for UPS and the business thrived. So this year, this quarter, Amazon UPS was comparing with last year when online shopping was much higher than it is now. And I was just about to say Amazon because when I think of online shopping, I think about Amazon. And you're probably spending less money on Amazon this quarter than you were at the same time last year. You're probably spending more money going out, going to restaurants, going to get haircuts, doing things outside of your home, and that's not good news for UPS. And we saw that in the earnings this quarter. Revenue fell, earnings per share fell. Here's a quote from UPS management I pulled directly from their website. In the first quarter, deceleration in US retail sales resulted in lower volume than we anticipated, and we face ongoing demand weakness in Asia. The key word here is anticipated, lower than we anticipated. So everyone and their cousin was expecting a slowdown. But the key here is that the slowdown was worse than they anticipated. That's what led to the big fall this quarter, and that's what led to the stock price falling as much as it did. If it was in line with what they anticipated, in other words, it's what they planned for, right? It's what they hired for, it's what they staffed for. Earnings would not have fallen as much as they did because they could have scheduled fewer staff, they could have hired fewer staff, and they could have controlled expenses so that earnings did not fall as much as they did in the quarter. So that's what the key was there, that it was lower than anticipated. Average daily volume in the US declined by 5.4%. Now that was offset by a 4.8% price increase. So UPS has, like many companies, raised prices several times ever since inflation really reared its ugly head. And that's helped UPS tremendously because they've had that higher price to offset some of those inflationary pressures. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Average daily volume decreased by more 6.2% internationally, and there was only a 0.1% increase in the price per piece internationally. So the international segment weighing much more on the business than the domestic segment, and that's also to be understood. The European economy is faring much worse than the US economy, getting hit with inflationary pressures much more strongly than in the US, and they have to combat the fact that there is an ongoing war in the region. So understandable that region impacted more negatively than the US. The company updated its annual revenue target to 97 billion and operating profit margin of 12.8%. Earlier, the company had given guidance for the full year 2023. This updated guidance pretty much says, you know what, that upside that we were saying that we might be able to have this upside if we get lucky, if things work in our favor, they've pretty much eliminated that. And they've said, you know what, the chances of that are looking extremely slim. So they eliminated that. They updated the target to say it's going to be closer to the lower end of what we told you we were going to do in 2023. Still, UPS will pay dividends of $5.4 billion for the year. No risk, no elevated risk to the dividends from the updated guidance from the current quarter. No long-term negatives for the company that resulted from the current quarter. Just the fact that the macroeconomic headwinds were much worse than they were anticipating. The change in consumer shopping habits were much worse than they were anticipating. And this is a difficult thing to measure. It was difficult to begin with to measure the big increase in demand that they experienced at the initial onset of the pandemic. So they miscalculated the upside. They also miscalculated the downside. But I wouldn't go so far as to um, attribute any of this uh, miscalculation as a reason to look at management in any lower quality, just because the difficulty of this experiment to try and calculate what demand is going to be is so much harder because of the unprecedented change in consumer behavior as a result of the pandemic. It wasn't a usual increase or decrease in consumer demand where UPS has decades of data where they can use to evaluate how to adjust their business. This was totally unprecedented, so it's to be understood that there would be some miscalculations there. So I give management a pass for that. And because the miscalculation wasn't so severe, it wasn't like huge. And already the industry is starting to adjust. FedEx in the previous quarter, FedEx already announced that it was undertaking major cost cutting, grounding planes and cars, and saying, you know what, we're gonna lower our capacity because the demand environment has changed. And I wouldn't be surprised if UPS does the same thing. So all in all, um, the to answer the question I said earlier, to say is it justified for the stock price to fall by 10%, even though I also said that the long term there was no major damage? And the answer is yes. The answer is yes, because the company downgraded what they said they're going to deliver for the year. So an entire year's worth of revenue and profit is going to be lower than what investors were expecting. So that deserves an adjustment to the stock price because the company's outlook has been adjusted downward for the rest of the year. So yes, the stock price should adjust downward. Although longer term, I don't think there was a risk to the dividend. I think the dividend is still safe. I think if you're a dividend stock investor, UPS is still a worthy stock to consider buying. All right, that's all I've got for this video. And if you like this video, I'm going to have many, many more like this one. I'm going to cover a lot of companies during earnings season. I've already got a lot of videos out. So if this is something that you like, I recommend you subscribe to my channel, and I would really appreciate that. So thank you so much for watching, and I hope I'll see you again.